And good morning, everybody. Welcome to the Hawkeye session. Today is Tuesday, December 15th. This is a live trading room, and we will be looking at, the first thing we'll be looking at is the Aussie US dollar. And the disclaimer is, trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. And with that, we will go to the charts. And we're looking at the euro, I believe it was the Aussie US dollar is what we've got. Let me change my screen here, and we'll get started, see what we have. And what we did, we have the 15-minute chart, 8/7/40, 7/30. We had a ascending wedge. Actually, excuse me, it was a descending wedge. So that means we need to go with the A up here. We had the B. I'm going to pretty much flatline the A and C. It was pretty much of a flat line there. And we're looking at we had the break at right when we had the alert, we had this first 15-minute candle broke and closed above. That was pretty much of a trap area. You can actually see over here on the left-hand side, you had a strong drop, a base, a strong drop. This A retested this base up here. Pretty much right about in this area. So this ended up actually being a trap. It looked like a breakout. But there again, what we've been seeing an awful lot lately is you get these wedge alerts. They get a breakout. They break out. They only give you a head fake, and then they can go in reverse. So once it broke out, came back in, I'm still looking at this as somewhat of an uptrend. If we look at the A, bring the A, move, we can now, in fact, we have this alert candle here. We can move the C, I'll move the C on up here, and now we have our channel. We have an upper sloping channel. Now the question is, if this breaks out of the bottom, it's probably going to go lower. If it breaks out of the top, it's going to keep on going higher. Right now, it's looking like it's sort of basing in between this channel. So I put a buy limit down here. Came down in. It did get me in. Now I'm not going to give this a lot of room. In fact, I'll probably only let it go down to maybe as low as the B. We'll see where from the B to the D area. That's our 8 pips. I'm going to give it a 10 pip stop with I'm going to go with a 12 pip target and a 10 pip stop, and I'll adjust that as time goes on. But right now, that should be a comfortable target. It's down here by the B. If it breaks through this little box right here where we have, then I'll just get out of the trade. Right now, it looks like what I'm looking for is that this thing for the wedge to pretty much hold. Now, this was a strong candle down, so we have to be careful with this one because it's a strong candle down. It's basing right now. So if this comes back into the wedge and comes back out, I'll probably exit this trade, and we'll see if we can see what we can do here. 7 pips. It should take us up to. We got in at this trade right at the 75.24 area. 75.24. 7 pips is going to be up to around 31. If it comes back up into this region right here where it actually broke out of the wedge, then I may look at possibly exiting this trade and taking my profit on this one. I'm not going to let it go too far against me. In fact, I'm going to move my stop right up here, tuck it in real tight, because that way, if it comes back down out of the wedge and comes back in, it's probably going to, good chance it's going to go short. So I'm only going to risk about 4 pips on this, and we'll see what happens. One thing about it, when we had the wedge alert, if you look down the RSI, you can see all the RSIs are right here at the top of the range. Once we got the hook down, that was a strong move down. Now it's coming back down into the 89 and 75 area, especially as this blue RSI crosses over the 8. They're both pointing up right now, so you have some upward pressure. So we made this maybe one of those little trades that may just stay within the wedge, but we could still possibly get our 7 pips out of it if it gets up here to like the 32 level. In fact, I would just bring my target down to the 75.32. And if I can get my 7 pips out of this, I'll be a happy camper. This is a very, and we're going to be seeing a lot of these really tight ranges, I think, for the next couple of weeks, where it's still going to move. It's still going to give us some opportunities to get some trades. We're going to have to be real careful of that because they're going to be somewhat range bound because there's not going to be a lot of volatility, I don't think, for to get these really strong big moves that we were often like to try to get. So we're just going to try and keep ourselves flexible, trying to not get too locked in on too big of profits, just trying to take those little 5 pip moves and be in and out of there and look for the next trade. Any questions, comments? Again, this is a good example of being careful about taking breakout trades. We had the breakout, but it broke us out right up into a little trap area. It came right up in. If you look over here to the left, you'll see that we've actually had a nice big move down. It based overnight. And right around where the London session started, which would be right around the 3 o'clock area. Here's where London started. Usually the London session, beginning of the London session till the noon session of the U.S. market are usually some of the most profitable times to be taking trades. Let's see what the range is here from the high of the open to the low. Basically have 38 pips. But it hasn't really broken out of this overnight range. If you look at the overnight range from the high to the low, and you'll find out as time, you'll find that that range is significant in a lot of in more ways than one, and you'll see that as we go along and over time, you'll see how that plays out. But this is really the box that we're playing in right now, and you can see it's right in the middle of the zone. Here's our 15-minute fib line, and those are usually fairly strong. And if I put the 5-minute lines on, go on the 5-minute chart now that we're in the trade here. Oops, didn't want to do that. Maybe adjust this again. I'll lock it so we don't. So right now, even though you can see it's sort of trending, we've got a high, a low. Here's the wedge, but here it broke out of the wedge. So now we have a higher high and a higher low right in here. So this thing still could keep on going up. But it's also coming right up into our 30-minute 62, right up into our zone. So if it gets back up in the zone, I'm going to be out of this trade. It may keep going higher, but if I can get my 5 or 7 pips out of this thing, I'll be happy with that. I'll keep watching. The RSIs are about right now, they're in the middle, so it's starting to stall a little bit. And here's an anchor, here's a hit, here's another hit. So that validates this trend line. Now we can move this thing over to I like using the bodies of the lower candles and then the wick of this. So right now this would be, I can keep my stop below this. If it were to come back to the zone before I take my profit, then I would just get out of this trade. If it can move up 5 pips, that means it's probably going to be going a different direction. It may just keep on getting lower highs and higher lows until it finally breaks out near the end of this thing. I'm just about ready to take the profit. If it doesn't close me out, then I will close myself out. Like I said, we have our 15-minute fib line up here. Here's the 5 minutes in between. Here's the red. Here's the green. Right now, it's just crossed the green. Here we had the green. We passed it, checked it, came back down. Now it's checking it again. Here's our 5-minute green fib line. Last little push. Here's our red 5-minute. Right now, we're within our 7 pip region right here. From this green fib line right here to another 7 pips is going to be right up to this one. Actually, that must be a two period. That is a 2 period. Let me put the 5 minutes on.
Now, question.
It's just about to take the profit. Last little push up. Let's see how much time do we have. We have about, there it goes. There's our target. There's my 5 pips for the day.
Go.
That was one of
But you have to be careful. Again, we have to be really careful with these little head fakes up here. And I really like to see when we do get a strong move up, when we get the strong move up here towards getting up to the 75 area, you're better off just waiting for that pullback and then try and catch the hook on the upside. Try and find out where the trap is. This was the trap right here. And this is why I like try and take it. I'd rather take it on as it breaks out of the bottom, especially when you're starting to see some up, when you can form an upward channel and you can catch it at the bottom of the channel, then there's a good chance it's just going to keep on going. So right now, here's our channel right here. Here's our, here's a high, here was a retest, came back down, retest, came back up, broke it. Here's the high of the channel. Now this thing's in a channel, upward sloping channel. Comes up here. This could be a good target. This could have been a target as well. But once it gets up in this area, unless we have some reasons, here's the overnight high up here where the white bar is. So it could come up and retest the overnight high, but there's probably more likely it's going to get pulled back again.
Christine, I can hear you very, very quiet.
Oh, is that better?
No.
Not much. Not much better.
Okay. No.
No. Is there some way you can turn up?
I'm going to switch to a different port.
Okay.
I said, if you did take it long down here, I wouldn't give it a whole lot more room. If it breaks out of the top, you still might have, see, from this point to the overnight high, you have another 11 pips. So, I mean, this could end up being a nice little trade, but again, leave a little bit for the next guy.
Now, is it better?
That's
better.
Mm-hmm.
Yeah. Okay.
There we go.
All right, 2 questions, because I think you didn't hear my first one, which was much earlier on. But when you had it flat topped initially, when we were at the 15,
right, when we were down here like this,
exactly, and then you had moved it up into the channel when we got the head fake, and then you went back to the flat top. Is there a reason you switched?
Well, it was just to show how big the higher high is all. I mean, really, when we had the alert, it was a descending. Actually, we have a U.S. Swiss, but we had a descending. So basically, what was really happening when it was descending, it was actually looking at this area right here like this. But by the time I sat down and saw the alert actually happen, it was already past this point. It already broke through the descending and it came up. And actually what it did was it gave a pretty nasty head fake, because if you look at the 5-minute chart, if you look to see where the alert candle was, which was this little candle right in here. Now that was on a 15-minute. Let's go back to the 15-minute chart. And we'll blow this thing up a little bit. Here was where the alert was. Here was the candle right before the alert. So a lot of times what we do is we try and see that is not a descending slope to me. So you either have to come back over here to, and even that wasn't quite descending. So really, this was really where it was. This was probably the first high. Here is a hit. This one sort of flat was sort of made it. So this point, and they really didn't get any. This was a marginal breakout here as far as changing the trend from flat to descending to. So here's where, and this is where the breakout candle was. Oftentimes what I like to do is I like to draw a box around the candle that was the previous 15-minute candle before the breakout, or before the wedge alert, which would have been this candle right in here. If I can draw this.
Yeah,
and if it can, right, this was the candle that generated the alert. And you can see where it actually made a little bit higher high than here and a little bit higher high. So that's why I pretty much chose this area for, this was, this candle that generated the alert. I mean, there was this, I don't think it is still a little bit lower. There's still barely descending. Maybe not. That's why I consider it more of a flat top anyway. It's so close to a flat top. It broke out, closed above. Yeah, 15-minute candle that closed outside the wedge. Now, if you were to look, so if you look and see what the range of this is, and I'm going to check this out, is 4 pips. So basically you got a 5-pip breakout. I mean, you would have had to have taken down here just to be able to get the 5 pips, and even then you probably wouldn't have. It was a pretty strong candle. It was a bullish candle, but then the next 15-minute candle just crashed on down. But if you look at the 5-minute chart, you'll see that it really gave you a pretty nasty head fake, because you had a 15-minute candle that closed. You had a 5-minute, but the 5-minute candle never turned blue again. It was red. It came all the way down here till it never turned blue till it came all the way down here. So if you're looking for that retracement to be able to get back into it, you really need to see a candle turn blue. Now on the 1-minute chart, I'm not sure you ever saw. Yeah, we saw a little basing right in here, but it never really did get above the high of the 15-minute candle. And that was, I mean, this one could really suck you in really big time right here. Mm-hmm. But that's why you have a tight stop. You have a tight stop when it comes back down. I mean, at this candle, I was looking at this area. If it came back down and came back into this little retest zone on the 5-minute, and it took me through that, I'd be out of the trade. But then you're still looking to see, okay, is it going to bounce off the bottom of the wedge? In this case, it came right down to the bottom, gave us a blue candle, gave us a little bit of a strong move down. Blue candle came back down, retested the bottom of the wedge, and that's what kind of got you right into this trade. So this was, and we're seeing a lot more of this lately, where it pops out, comes back in, retests the bottom of the wedge, and then comes back out and this is really where it's starting to. So really, it's still range bound right now. It's still really in, but so I'm looking at making this wedge just a little bit. Might as well make it bigger, because that's what it's still making lower highs right now. Mm-hmm. Now, if it breaks out of the top here, again, you're looking right up into the overnight. So this one was a tricky one, but this is one reason why oftentimes I like seeing when on the pullback, try and take it on the pullback, because if it is an upward sloping channel, then you have a really tight stop with a lot better gain still inside the wedge. If we still had enough room inside the wedge to be able to get our profit. And even like right now, you could possibly maybe even consider taking it short again, but I'd be more apt to wait for it, since this channel is sloping upward. I'd be more apt to wait for it to come back down here, hook again, and then take it long again. Wait for that next pullback. So having said that, let's look at the US Swiss. Go put over here US. Let's see. Check our see where the US Swiss. Here's the US Swiss that's on the 4 hour. They're both pretty weak, both pretty weak, both pretty weak, both pretty weak. So right now they're fighting for last place, and we're just gonna have to wait and we'll have to take a look at it and see if it makes any sense to try and take that trade.
Now,
So
is this a bag alert?
is this a bad alert?
No, no, bag. BAG
Oh,
or
bag alert?
arrow.
No. The U.S. Swiss is a
Iris.
Iris. It's an Iris alert at 8:15.
Okay, hold on.
So we're going to go to our 8:15 area on the U.S. Swiss, and we'll take a look at it and see what it looks like here. 8:15. We have a rally base. This one could be a real fairly strong move to the upside here. So we have 8:15. That was the alert candle right here. So it was opening up here, strong move up. Not much of a wedge, what I see. I just see a basing strong up base. We have a red candle base. Let's take a look and see where a target could be on this one. Here's the overnight. Oh boy, let's see. Overnight high, overnight low. So here's our trading zone for the overnight. Here's our yesterday's high. So we did have a little bit of high over here. Here's the overnight high. So we have a little bit of a trend here. See if it's going to break through that. If it does, it still has to get through yesterday's. This is yesterday's high, yesterday's low. So let's use this as a target for, see if this thing's going to find a new home to the upside. And let's check out our 15-minute zone, see if there's anything there that we're going to be wary of. So I'm going to go to our 15-minute chart, put the 15-minute zones on. And is there anything there? We have a 15-minute zone here on the right here. It bounced off the 15. And that's a 15 green. So here's the 15 red, right in between the two. Let's put this onto a 5-minute. Let's go to our 5-minute candle, 5-minute chart. Put the 5-minute zones on, and there they are. Here's you can see where the top of this yesterday's move was right at the red zone. So we can just put that right there. The bottom was right here by the 15. It just wicked right down. And it's starting to break a trend. The overnight high is starting to break the trend. We have a little hook, came back down, didn't hook down very deep. So this is a lot of strength to the upside on this. I'm liking this with on the 5-minute. We're showing strength on the dollar on the 5-minute. Let's go to our 15-minute chart. 15-minute chart, we're starting to see, we have strength in the dollar, not a whole lot of strength. And I think with the fact that this only has a 2-point spread, I think I'm going to wait for it to break out and come back and retest the wedge if it breaks out. Not a big fan of this one. Right now we had a pass and check of the green 5-minute fib line. We do have the moving averages, green, yellow, purple. And on the 15-minute, we have green, yellow's crossing the 62. So that's a big crossing area right there. And we have and it's crossing over the 30-minute 62. I definitely want this thing, I'd be more apt to go with this thing to upside just because of the strong rally, basing, and looking for it to rally again. Now you have to be careful because sometimes you have a strong rally, basing, and then a retest of the origin before it breaks up. From a channel standpoint and a wedge alert, the wedge alert on this was a ascending wedge, which means it's going from low to high. And so I would be looking at this low. Let's see if the overnight lows and highs would make any sense with this. Here's the low. Here's the high. Here's the next higher low. Here's a equal high. Here's our wedge. Here's our channel. If it breaks the upside, remember we have this overnight area right here, which was not just over last night's overnight. It was well, actually this was last night's overnight. No, that this is the yesterday's high. So it's looking at retesting yet. It's all going sideways right here. This is all sideways motion, even though you have some, it's not really trending, but here's your W. So we could be looking at this thing to break to the upside, up, head on up towards this 15-minute area. It's basically coming out of supply. Because here's your blue 15. Now, I would say if it can break through here, I'll be looking at possibly this area for the target. And that's probably going to be very close to where the other high was a couple of days ago. Yes, Christine.
You had said that it's coming out of supply.
Or, oh, excuse me, out of demand.
Okay, all right.
I misspoke.
That's okay.
This is a nice little bounce off of this area right here. And you can see where it came down, tested this 15-minute, broke it, came back up, retested, couldn't make a lower. So now we're looking at this could be the wave 3 coming back for wave 4 and then a wave 5. If you're looking at an Elliott wave type of thing, here's a high, here's the pullback, here's your higher high, probably have a pullback, and then it comes up to retest the 15. So we want to just wait until we see if we get a good opportunity to get in. I'd like to see this thing break the wedge and come back, and then come back out. If it comes back and test the wedge, maybe come back in a little bit and then come back out and pop out again, and that would be the time to take the trade. This thing still could come back all the way back down here to retest. It's still somewhat range bound. So this one we have to play with a little bit of caution. And let's see, let's go back to our, we're looking at this. Let's take a look at our Australian dollar, see what it's done. You can see it came back up. It still didn't make where it broke out of the wedge. It still hasn't, wasn't able to break through this high up here. I'll keep looking at this one. Right now we have an anchor. Here's a hit. Here's a little bit of a breach, but it couldn't really go too far. It came right back in again. So that sort of confirms this trend line. And we have another trend line down here. And let's see.
A Kiwi US alert just came in.
A Kiwi. Oh, okay. Let's take a look at that one. Look at this. And look at the Kiwi US. See how this one looks. And that was a descending wedge at 8:30. We're getting a lot of work, getting busy today.
Yeah, that's good.
Yeah, there's lots of action.
Hey,
Morning, my friends.
There he is.
I'm here.
Let's see. We have the Kiwi. It's Kiwi descending wedge. So here's our high. Here's our low. Let's take a look at our overnight highs and lows and see where it is from the overnight standpoint. Yeah, I don't have my session breaks on. Let's get those on here. Let's go to our 15-minute chart. Here's the overnight high. Here's the overnight low. Here's the range we're trading in. A descending wedge, so we're going to start up with the top and see where this thing will take us from the overnight high. Here's the low. Here's a hit. Here's the hit. Here's our descending slope. And we do have a little bit of a trend. It still keeps respecting this 30-minute 62. And here is our blue 15. I'll check that, make sure that's 2 minute. Here's on the 15. We'll mark that. These 15-minute zones are 15-minute Fibonacci's are really pretty powerful, actually. So here's our 15-minute. Here's the red. Here's the blue. And we'll get the 5 minutes in between. Go to a 5-minute chart. Here's our 5-minute. Oh, here's our 5-minute Fibonacci's. Here's our red. Here's our green. As we have a pass, it came down, passed, checked it, came back up on the 5-minute. Checking that one again. Our RSIs are up, still kind of high. I'd like to see a pullback first before I would take this thing long. Right now it's inside the wedge, so really right now you still do nothing. And if you check our moving averages, we have the 30-15. We have right now the yellow and the green are right neck and neck. It's still pointing down, still having a little bit more power, a little more emphasis to the downside. Let's see if we can find a sloping channel here. That's not going to work. That one's a little bit better. Here's a little bit of a breach. This could be the beginning of an up move. This could be the bottom. Here's a real low. Here's your 75 area right down here, 60, 89, or excuse me, the 11 to the 25 area down here on the RSIs, both of them. Here's a low, so that's sort of a pivot low. Here's a higher low near the bottom of a range. This could end up actually breaking to the upside. We did get the wedge alert. This was the candle. I like this one a little bit better than the Swiss.
I do too. I like how it rejected the 62, the 30-minute 62.
All the way up here. Yep.
Yeah.
This one I find to be somewhat problem. For going short, I find this to be a little bit of a problem right in here. If it does break to the upside off, yeah, the fact we have these 15-minute 62 is pointing down. We got the 30-minute 62 pointing down. It came up, it already rejected it. So I still kind of favor it to the short side. If we look at the RCS tool, right now they're still kind of neck and neck. Not a lot of confirmation on this one. So if we look for the higher trend line, here's an anchor, here's a hit. Looking to see if it comes up and re-hits it. There's another hit here. Still respecting the downward trend. So we had a little bit of a breach. Here's anchor. Here's a hit. Came up. Let's see. We have 86 to the break of 84. It's only a 2-pip breach. That's still close enough for me to still consider that as a valid hit. And here's the anchor. Maybe split the difference on this a little bit. And again, your RSIs are starting to come on up in the 15-minute. They're still pointing up. So there's a little bit of upward pressure. Still upward pressure, still upward pressure. But you also have to know you've got a little target up here to probably expect to bounce. Plus you have a fib line right up in here. This is a test of the green fib line right here on the, well, actually, they already broke that. Where's my red line? Up here. I'll put those up, mark those up so we can take a look on the 1 minute. There's a 5-minute red. There's a 5-minute green. Let's do that to distinguish them a little bit from the 15-minute lines. Rally, basing right now. This could have a nice little breakout. But our target would only be up here at the 70.81. We're at 70.73. So to get your spread out, I mean, this could be a possible, nice little trade, but you're not going to get much out of it. I like to see a little bit more room to the upside before I would take that.
You got a cross of the moving averages, don't you?
We have a cross
on
of
the 3 on the 1 minute.
We do have the cross of the moving averages. Yep, we have
a little bit of gap in between.
A little bit of a gap. It is starting to widen out.
Looks like the hull flipped on all time frames.
You want to take this one long?
I don't. No, I'll just take it on demo.
New Zealand. Let's see where it looks like on something else here. We'll see if we can get a 5-minute close outside the wedge. If we get a 5-minute close and comes back and tests the wedge and doesn't break through it, then I'll take a short, take it long. Let's see here. Let's see. This is New Zealand USD.
Couple more.
Actually, I kind of like it to the long upside, to the long.
Yeah, you do, eh?
I'd like to see a pullback first. I want to see a breakthrough and pull back. I want to see a 15-minute close outside the wedge, and I'd like to see it come back and retest it. Our 15-minute close isn't going to be until basically till 9 o'clock. What time is it now? It's
8:40.
8:40. Actually, 15-minute close will be in 5 minutes. So basically, when this 5-minute candle closes, when this red candle on the 5-minute chart closes, we'll see where it's at right now. But right now, I'm seeing this is kind of a head fake coming back into the wedge. Here's our reference box right here of the previous candle. But right now, it's not a trade. Now we're starting to get a little bit of strength over here on the 5-minute, and the right now we're showing the New Zealand as being a little bit stronger. So as it comes back to retest, we might actually have something there.
Yeah, I've got an important phone call I got to take.
Okay.
Something came up. Give me a little bit.
Okay.
I'll be right back.
All right. So right now I said I'm waiting for obviously 2 5-minute candles close outside of the this box basically and the wedge. Right now we got the 5-minute closed outside. It's a strong 5-minute candle, but it's also rejecting back into the wedge again. Let's see, we're getting a little bit higher highs, higher lows on the 1 minute. Higher highs, higher lows. We'll see what happens with this 5-minute candle, see how it closes out. We have New Zealand strength over here on the 7-1. That's good. We have 5 and 3 on the 5-minute. And we have a 3 and a 2 spread. Not real exciting on the 15. But this is a potential of getting 7 pips out of this. This 1 minute candle can close. Well, here's the wick up. Here's a little basing wick over wick right now. Your chart's ready. See if we can buy, stop. We'll see how this 5-minute candle closes. Like I said, I'm not a big fan of breakout trades, but I already did have the wedge. It did come all the way deep again after the, right during the alert, and came back out, rejected it, and closed up higher. So, like I said, we do have this trend line right up here that we have to be careful of, that we have to be able to get through, or at least get enough to get up to that. And that's only 3 pips away.
How much
we do
room?
have, what's
Sorry.
that? Oh, go ahead.
I was just going to ask, how much room do you think there is to go up, like target-wise? Sorry, I made
Yeah, I'd say best case scenario, we'd probably get a bounce off of the 30-minute, bounce back, maybe possibly be able to break it. But right now, I don't see a lot of room to the upside. I'm not liking the amount of room to the upside before we're going to run into another bounce.
Mm-hmm.
We have the 1562 is right here. Let me mark that up. So here's the 1562. Now it did close above the 5-minute 62, but all you have in the consolidation right in here. Check our 1 minute chart out. Yeah, I'm still going to pass on this one. Doesn't have enough of a spread down here for me. And I don't like all this, I call it rebars. We have the 30-minute 62. We've got the 1562. It just barely crossed over. We're just basically having the crossover and the consolidation of the 5-minute. And so I look at this thing more of a, maybe more apt to come on up, come back and retest this area down below. This is one I think I'll just pass on.
Yeah, I'm not much caring for this one either.
Let's see here. We did get another alert on Arrow. Let me see what that's doing here. That might actually be a little bit better. Let's check that one out. Hang on a second.
Yeah, I just had a look at the Swiss. It's not doing any better than the New Zealand.
Yeah. Yeah, I think I'll be passing on that one.
Yeah.
We're looking at another alert for the Euro New Zealand, but I don't like it as well either. It looks like it's no, they don't pass on that one.
Is that on your arrow?
Yeah, that's the arrow. Yeah, it's not in the right spot.
I seen something we aren't seeing.
We're probably going to start using the arrow alerts in this room as well. As we're working, we talked to Sal last night, and we haven't quite got the final go on it yet. But as we do this room, it's going to end up being, it's not going to be just a Airis wedge alert trading room. It's going to be more of we're going to be making this into a technical analysis, trying to, as we get these manual alert systems like we have, like the Arrow and the Airis, our hopes are to be able to just incorporate those alert systems into the trading to try and get better entries and try and make better decisions of whether or not to take the trade or not.
Oh, great. That'll be good.
So, yeah, so we're going to be using, we talked to Sal last night and he thought it was a good idea and he's going to run it by his committees and boards. And I think that's probably going to be coming the beginning of the year.
Oh, good. Yeah, that sounds good.
So it'll give us a little bit more to work with than waiting for alerts that may or may not be working. And it gives us another little system to some other, basically what these alert systems will do is it brings you to the chart to make a decision if there's a trade for you or not.
Right.
And there's a lot to be said about that. So in this way, and plus we'll be basically the technical traders to teach people technical analysis and manual trading.
Mm-hmm. That'll be great.
Yeah.
It's
so we're hoping to make that a reality come the beginning of the year.
That's good news.
That's good to add some more another angle to it, you know.
Yeah.
We just passed the 5-minute 62 on obviously on the 5 minute. Go figure.
Imagine that. We are getting a nice little spread right here. I mean, I do like this. One thing I do like about this, we have a strong rally, a basing, and if we can get another blue candle to close it here, then I might be willing to maybe just take a shot at a buy stop right above this candle right here. Mm-hmm. But I would like to see it kind of, I mean, there's another, let's see, 70. You have another pip to it, breaks right at the 62.
The New Zealand's gaining strength anyway. You didn't see this?
Yeah, I like to see the New Zealand get a little bit stronger and maybe have another pullback and then maybe another attempt back out. So if it pulls back real deep and it still stays relatively strong, if it pulls back especially near the bottom of, again, this is a downward channel. So I'd be more apt to be looking at this being like almost like a head fake here. The bodies of the candles here, the body. And we'll see what it can do right up in here. This almost looked to me like it's forming into a little bit of a trap. In fact, I'd be more inclined to take this thing short up here. You can see that there's a lot of indecision right here. Everything's still kind of going sideways. You got a lot of wickiness going on right in here, a lot of wicks. So there's a little bit of a battle going on. One thing, we did have a nice little pullback down here, came back up. This pullback here couldn't even break through the 50% area. So it does show some strength to the upside. I just don't know that we can get enough of a range out of it to take the trade.
Yeah, that's what I was.
It's not really fitting my trade rules of the. I want to see all these moving averages being in the right direction. I want to see the 30-minute 62 being below it before I go long. I'm more apt to look at it as this thing's going to come up, bounce off of the 15 and this range right in here. That's the 70.81 to 70. We're only looking at a 5-pip range right into this area. It's only about 5 pips. I would look at this more as being the trap right in there. You have this high, breaks out. We got a strong move up, breaks out. And a lot of times you'll get a really strong move up right into the trap, getting everybody thinking it's going to go long, and then you just go and then they reverse it on you. The fact that the RSIs are coming up to the top, I would see rather take it short in this area than try and take it long, because eventually they're going to be cycling. Here's the low. Once it comes up to, it makes a new high. The other high that, if you look at this 15-minute chart and see where the, oops. If you look at the 15-minute chart, if I can get a 15-minute there, and you see where the consolidation is right here. So this is the low right here. There's an extreme. If you look all the way over here, this was the extreme up at the top, which is all the way up here. But until then, it was just sort of, you have a move up, come down, move, and you see where these steel peaks on the 3-period moving average are, and the orange one, the 8-period, just stays right here, and it's still gradually going down, even though it's making these little peaks are coming up. So if this comes up and hooks, I'd still be more apt to look at this thing being a short at this area because it is still trending on to the downside. This is the only thing that gives me rise to think this thing could be starting to turn around to go up since it did have such a strong move down. The last time you really had the retrace extreme was all the way up here at the top, which is way above this 15 minutes. So this thing could really go up. I mean, it has the potential to go all the way up here. The question is this the bottom? I do like this part where he had a strong move down, a retrace, another strong move down, and it couldn't break through the bottom here. That would give me rise that this is the bottom of the move to go to the upside.
So how does it look on a higher time frame as far as the trend goes?
A higher time frame trend, let's go to a 1. It's pretty much of a down move here. But if you're looking at from the higher time frame, you had a breakout here, it came on up, made a new high, but it still hasn't really come back down to retest this low. It's pretty much right now in the middle of everything. So from a higher time frame standpoint, it's not really, it's kind of in the middle of this higher time frame. It is the last couple of days, it is sloping down, but it's coming the beginning of last week. This was back on the 10th, and the 10th was on Wednesday, I believe, last Thursday. It made a slow on Thursday, came up, made a new high, a higher high. Here's the retracement. Here's the retrace extreme up here. Came back up, retested it, made a little higher high, and now it's on the way down. So it's between your 15-minute ranges, your 15-minute blue and your let's see, where's the other 15-minute blue is down here. Is that right?
Yeah, I think
Let's see. I think that's right. That's 15-minute. Yep. And we have 15-minute red, green. Yeah, here's the 15-minute blue. But here was a, right, this is the low, came up, made the high up around the 15, couldn't hold it. I'm still more inclined to think it's going to come more apt to break down to the downside, at least a little bit further still. So it gets back down to this area. I'm still going to pass on the going long. Let me check something out here. If we do, here's the low, here's the high, here's a pullback. It's a 55% pullback. It could come back up and retest this area and then come back down. We're really in the middle of a zone of not sure which way it's going to go.
Yeah.
There's really no way of knowing for sure. If it does break the wedge and with some strength, I'd be looking at the this area right in here to for a target around the 70.96 area.
Anybody have any questions?
If you have any questions, just raise your hand and we'll turn your mic on. You can ask away. We're more than happy to open your mic if things aren't quite clear, you have some ideas or something you want to take a look at or some other explanation of what we're doing and how we're doing it.
Okay, my mic's on already.
Then ask away.
All right, on the Fibonacci. Okay. Now, when we go and start breaking them down into the 5 minute and the 2 minute, okay, that's just to give us the separation between to decide if we're in the lower, middle, or higher part of the 15-minute spread. Correct? Okay. And then when we do it, I don't think we do it on the 1 minute. We just do it on the 5.
I will do it. I will put the what I've been doing lately is I find where the 15-minute zones are and just sort of keep those there. Because generally speaking, is they'll be trading inside that 15-minute zone for possibly for the whole day today. But it's also going to be ranging in the upper third and the bottom third. And the other part will be is that when it breaks the bottom third, for instance, like on this one, on the New Zealand, we have our 15-minute zones way up here. Here's the blue, the red. So basically it's going to go from the red. It really goes from blue to blue, but right now we're right in the middle of the zone of the 15-minute zones. We're right in the middle with the red and the green. We're right in the middle of it. So what I'll also do is when you see it break this level, I want to know how far did it break in between, like for instance on this one, and oftentimes I will put the range between this and here, I believe in this case is going to be probably, I think it's going to be 21 pips. 21 pips. So when this one broke and closed and this whole region right here, there's a 2-minute zone level right there. So if I put this on a 2 minute, that's going to break down those 5 minutes into a thirds.
Right. Okay.
And you can see that as I do this, if you look and see, here's your 5 minute. So really, this is your 7 minute. So this is actually the trap area on this down move. This is where it came down, broke it, came down, couldn't, and this is the so this area right in here is that zone that I'd be looking at for a target zone. If it comes back down again, this is the zone I'm looking at right in here. This is where the demand is on, this is on the 5 minute chart, but this would be where the demand is. And let me see if I can find that. Okay, so now when you come up to the top here, where you see where it made a new high. You can see where this is basically the overshoot of the 5 minute, and it overshot by 7 pips, roughly 7 pips. Here's your 5 minute up here, and you can see where this one didn't quite make it to this 5 minute. So this is really the undershoot of the 5 minute zone, and this is your 7 pips to the. This would be the 7 pip overshoot, and this would be the 7 pip undershoot of this zone. So basically, what we're looking at right now is this is the range that is going sideways in.
Okay.
So every time it comes up to here, you have a choice. You can take it short and expect it to come back down here. Right now it's going up, down, up, down. So it's tested this once, tested this once. Right now it's in between. Right now this one is testing this zone right here as an undershoot.
Okay.
And that's why, but you see it's just, this is sitting right outside the wedge.
Mm-hmm.
So that's why a lot of times where I call these things really the trap areas. Now the range, now if it does break through this, then more than likely it's going to have a little problem getting through the upper part, which is now this would be the overshoot. This is your 7 pip. So the 5 minute red line is a marker. Also, the 5 minute red line that means it's starting to break out of this middle, heading up towards here. But it's not going to do it all. It's probably not going to do it in all one clear shot. So it's going to come up, break the 5 minute, come back down, retest the 5 minute, and then it may come on up maybe to here, come back down, retest it, and then it may come back on up. Eventually, it'll probably work its way up. But right now, I don't. It has no direction other than sideways until it gets out of this region right in here. So your best bet is just to wait until it does. Once it breaks, because this could be a significant level. These are significant thirds right here. Here's the third. Here's the third, red to the green. That's the third, and then green to the 5 minute here, which is actually would be a red blue zone or blue 2 minute zone. So right now, but I'm just saying is that this is a sideways motion. It's ranging. Every sideways. Every time that price is going sideways, inside that sideways motion in a lower time frame is a trend. Here's a trend: up, down, higher high, higher low, higher high, and then it now reverses: lower high, lower high, lower low. So here's one: lower high, higher low, or lower high, lower low, lower high, lower low. Here's our 5-wave trend. Here's our pullback. Here's a retest. And now this thing could be starting to go with another start with a wave 1, 2, 3, 4, 5 to the upside now that it had the retest down here. So this could very well be the beginning of it to come on up, retest it, pull back to the wedge. The wedge holds, comes back up, retest it. And each one of these little zones are 7 pips. We're just trying to catch that 7 pip area. You can see like right now, this candle right here, it pulled up into the green zone, came back, retested. It really didn't, right now it's basing right in here. Mm-hmm. If I were to take a long, I'd be more apt to take a long right in this area with the idea of you got 7 pips between here and here, and you may go up into the middle. That would be so you have a chance of getting your 5 pips. And I do like the fact that these are pulling back and they're not pulling back all the way back they're only pulling back halfway. So it's still showing some upward strength. On a 5 minute, we have our 4 pip spread on the 5 minute. We're still not getting the strength on the 15 minute yet. I like to see a 3-point spread on the 15 with confirmation on the 5 and the 1. So once this thing gets to have a 3-point spread, I'll be looking for a pullback on the 5, be looking for a pullback on the 1, waiting for the 1 and the 5 to hook down here by the extreme area, the 75 to 80 or the 25 to 11 RSI level. Get the hook, get the blue lines on top of the orange, and then try and take the trade. And oftentimes that's the pullback. Oftentimes we see where it's retesting the other side of the wedge. You want all the stars to line up. Okay. If they don't all line up, eventually they will line up. And that's the question where you want to take the entry. Do you want to take the entry before they line up, hoping that they do, or do you want to wait till they line up, giving up a few pips maybe on the pullback, but knowing that now you've got everything lined up and to go in the right direction. Right now, they're not really lined up. You've got too much consolidate, too much conflict over here.
Yeah. We don't have our constellation yet.
You don't have the constellation yet. And you say on the 15, this is 1 hour. I got this back on the 15-minute here. Again, you can see where it tested the 16, pulled back. Tested the 15-minute 62. We'll see if it can break. If it can break through here, well, then once it breaks through, then we're back into the undershoot. Now we might have 7 pips, so we get to the 5, maybe a little bit of overshoot. So you could possibly get your 7 pips to this region up in here. This would be an overshoot. Let me change this. But when you start getting these fib lines conforming with where the breakouts are, it helps give you your target zones for the price action.
Right.
These are prices that institutions are looking at. They're not looking at this stuff. They're looking at this stuff. But they're looking at it on a higher time frame. That's why I like using these 15 minutes as a good marker for targets or for where the 15-minute holds and how far did it hold. What part of that three-point range between this 15-minute is it in right now? And right now it's sort of in right now it's in the middle of this 15-minute range. Once it can break out of here, then we'll be looking at coming on up with an undershoot and overshoot of this one by 7 pips. So if it can break, clone this, here would be the overshoot up here, 7 pips. This would be the undershoot of this 7 pip area of this area. So if it does break, I would be looking at if it can break through this area, this 5-minute, this area right in here, this 5-minute area. If it can break and close, then I'm looking at this area for a target. Any questions? We're past 9 o'clock. We still don't even have a really good, strong 9 o'clock move yet, which makes me think this thing's going to be just, these things may just be a snoozer today.
Any other alerts on Arrow?
Yeah, no. Well, there was one with the euro yen, but it's nothing I want to take. It's too close to the demand zone. There was a quick one came through a few minutes ago, but it's not one that I'm going to take. I'll just give you a little bit of idea what. Let's see if I can. Let me see. Let me show this a little bit here. Let's see. Figure out what I want to show here. How we want to do this. Just in case some of you are interested how this kind of works with the arrow, is that there was an alert that came in, the euro yen. I pull up the euro yen chart and looking down, and here it says this is basically what it's saying to go short. Well, I don't really want to go short when it's coming right into a demand zone, so I'm just going to pass on that. If it came up here, or it came to go short on this one after it bounced off of here, then I would have taken that, looking at this as being the target. And what we're going to start doing is when we start getting these alerts, we're going to start seeing, is this the place to be taken at short, or is there something we want to wait or pass on? And we'll go through those analyses once we get the clear to go and start doing that.
So why would it tell you to go short there if it's coming into a demand zone? Do you know? Like, does that do that often?
It does, but that's one of the things we just, as you know and understand how it works, you just know to pass on those trades. Now, it could blow through that zone and get you your 20 pips, but the odds of it doing that are you're probably going to get a bounce, or you might get a better entry as it goes on.
And what was that pair, Al?
And that was the euro yen, euro yen. Let's go put that up. We'll just
Yeah,
take
it'd
a
be
look.
interesting to see what it does because I wonder, like,
Yeah.
does it know something we don't know?
Oh, I'm sure it does. I'm sure it does.
A whole bunch of algorithms in there.
Yeah, the euro yen. Let's go put it up here. We'll just
It's up higher.
well, let's do a little analysis on that right now. Okay, here's the euro yen. We have it on it. Let's put it on a little higher time frame chart. So right now, let's just do a little bit of analysis with this while we're here and not really taking any trades right now. So I'm gonna start with my 50-minute, and they use it on a 50-minute chart.
Oh,
So I'll
okay.
put the 50-minute zones on. And so here's my blue. This is a significant, again, here's our 50-minute blue. Remember, I'd say that I use that as a major bounce point, either a target point or a bounce point. So let's go and put this on. Here's why. Now we'll see if we can, as I just eyeball that, we'll see. I didn't really do an analysis on it yet, but let's just do one here. Here's a 15-minute blue zone. Here's 15-minute green.
That was a nice move away.
Here's 15-minute red. We'll just do those for right now, since that's the area that it's in right now. And 15-minute red. Let's keep down. There it is. And as we look at the overnight, here's the new day's break. Here's the overnight sessions. Now, one thing that so I'm looking at seeing, okay, if this was the range for overnight, let's mark a 9 o'clock here. 9 o'clock. Let's just mark 9:30, since that's when the market opens. So here's our range. Here's yesterday's range. And you can see that we're still pretty much range bound from yesterday. And we had a bounce yesterday off of this area. Well, we got the alert, the 15-minute alert we picked up on, let's see where the time was on this. This was basically, let's see, 15-minute candle. Was this candle right here. This red candle right here is where we got the alert. And what the alert is saying to do is basically when you get the alert, the down arrow is saying when this candle closes, you take it on the open of the next candle and you go for 20 pips. Well, 20 pips, if I look at where 20 pips are from where this candle closed, 20 pips is down here. Well, look where I'm at. I'm right here into this zone right here. So, and you can see where if I look at my 2-minute chart, my 2-minute zones, which is what oftentimes we use for our overshoot and undershoot. Let's put our 2-minute zones on here. Well, right here is here's basically our 7 pip zone, I believe. That actually maybe a little bit less because of the being a yen. Here's our 5 pips. So here's our undershoot. Because here's our big blue line, our big blue 50-minute blue zone. This is the top third. A lot of times I like, especially when I get down to for target shooting, so to speak, I like using 2 of these 7 period or these 2 period zones. So here's the main part, and here's 2 little zones support, and you see it came right down to that. So that's where it came right down, and it's bouncing right off of that. Well, if you're trying to go for 7 pips, you're more than likely going to either A, get a better entry on it as it pulls back to maybe get your 20 pips. If this thing pulls back up to this yellow line, then you may have a better chance of better entry to it, especially as it comes up to this line right here. This is a blue 2-minute. So with this pullback now with this alert saying it still has pressure to the downside, and there is pressure to the downside, but now it's also looking at it's kind of bouncing off this. Now it'll probably pull back, and there's a good chance it's going to come down and retest as well. If it pulls back like that, rather than taking it where the alert was, we're going to analyze to see, okay, if this is not the place to be taking it, maybe it will pull back enough with enough downward pressure on this 15-minute, because you see everything's still pointing down. This is a retracement right back up into our level. This thing's coming back up. If I can see this thing pull back up and hook, then I might take this thing short because it's probably going to retest this area. We also have and you also look, and it came from up top. It came up earlier. We had an arrow at, let's see, it's about 1, 2, 3, 4, 5 from this 1, 2, 3, 4. We had a down arrow right here. Now I wasn't awake, or we weren't watching for that one, but here was the first arrow that I generated. That was right after it came out of the zone. Well, if you were able to catch this one, you were able to catch it all the way down to where the next zone is. But right now we're right at the bounce of where this is. So I didn't want to take it right when it was generated. I didn't want to take it down here because I didn't have enough 20 pips to get to where this level is going to be. And that's how we're going to probably analyze these things as we move forward with some of this. This would be the undershoot. This is going to be this would be the overshoot of the 15-minute zone. So would I be willing to take it up here when this thing comes up? Probably a good chance. Let me see what it looks like on another pair. Euro yen. And we look at our RCS tool here. Right now, we're still showing the euro is the red line. So we still have our 3 on our 30-minute chart. We still have strength to the yen side on this pullback. Even though it's pulling back, we still have strength to the strength of the yen. Let's go back to our 15-minute chart. And if we can get it to where it bounces off of now here's the 7 pips beyond this 2-minute blue, which is the same thing as the 5-minute zone. I think that has to be 5-minute. Let's see which color that one's going to be. This would be a 5-minute red. This 2-minute blue is the same as the 5-minute red. They're both one and the same. And then here's the 7-pip overshoot of that. So having a pretty strong pullback. As I say, unless you know where you are when you get these alerts, you have to know where you are to see if you can get your 20 pips out of it. This thing's still pulling up, still has some pressure to the upside. This is still showing strength to the yen, so it's still only on a pullback.
So now, is it fair to say that there's a possibility if it's going to come down that it's going to give us another alert for a sell?
Nope. Oh, no, I don't think it will give you another alert for a sell because it's already given you the alert for the sell. But I'll take it. I will be willing to take it short here because now you look and see where you still had the alert. Now we have a nice little pullback right up into this area. It came right up to the yellow 15. And I think it's going to come back down and retest this. So this would be the area where I would be taking a short, right in this area. And if you figure if you can get in like right here, now if you come back down, now you've got your 20 pips to your target. Now you can take the trade. They use a little bit bigger stops, a little bit bigger targets than what we do with some of these other wedges, but you're giving it the wiggle room to be able to materialize down here. And basically what they do right now is if I were to take this thing short right here, I'll just sell it to market. And you're going to go with a 40 pip. You're going to do a 40 pip, a 20 pip target and a 40 pip stop. So you can't take as big of a lot size as we would normally be doing here. But here's your stop, which is way up here. And here's your target down here for the retest. Your target is right back down here in this. You get it pulled back far enough to where now I can get my 20 pips before I even get to my 15-minute blue line, and I can get it into there with the undershoot. Now, if I'm wrong, it's just going to go and it'll stop me up. I'm in a lot better position now than it was when I got the alert. But if I had the alert all the way up in here, and I got that alert, I'd probably just take the trade. But right now, I can probably, rather than taking a 40 pip stop, I could probably take maybe a 20 pip stop with the same degree of protection, because we know that's probably going to bounce off of this 30 and 1562. If it does come up, it's going to bounce off of that. So I may want to leave it up there just a little bit higher. But before it got up there, there's a good chance that it's going to, this is going to be coming down lower. But I could put my stop right here where these two crossed over, which is about half of it. Now I've got, rather than a 40 pip, now I just cut my stop down to another 13 pips. Modify that. So now I've got a 13 pip, basically it's almost a one-to-one price, one-to-one risk reward on it. And then this would be my target. Then you just go on to the next trade. Take a look at what we were working on. It's been a very profitable, very low stress. You still have to know you still have to understand technicals. It's still very helpful to know where you are to, even though it gives you the alert, it doesn't mean that you need to take every trade. You need to know which trades are to take and which ones not to take. Some are more cut and dry as far as which ones, but sometimes by knowing the technical analysis and being able to chart and understand where you are in the so-called supply and demand zones, it gives you a little bit better opportunity to either take a little bit bigger profits or keep your stops down to a more of a minimum.
Yeah, you're not just like blindly following. Oh, I got to sell.
Yeah, you're not just blindly following. I mean, it's a very good alert system, but it does have limitations, and you have to know those limitations to be able to work it out, be profitable.
Mm-hmm.
But it is a very good system. It's one that I think is well worth learning. Because really, we're doing nothing other than what we've been doing all along in our analysis here, just that we're getting a little different pictures, a little different signals about which, and it gives you the direction, and then then you just decide whether or not the direction is valid, and if it's too close to where it's going to bounce, and if it is, then you just stay away from it. But it's working with price actions. Basically, what the algorithm is doing is looking at price action and the patterns that we're drawing here every day. Is looking at those patterns as it makes its decisions whether or not to generate the alert or not.
how we have a lot of strength on every picture.
Yeah, let me do. Let's see. We have we're on the. This is Aussie US. Okay, yeah, it's
Mhm.
starting to. So we're starting to get the Aussie strength, Aussie strength, Aussie strength. So I do not want to take it short. Now I'd be looking at maybe more of a breakout if I can get a breakout. Now we're coming up to the 9:30 time frame, so we're looking at another 4 minutes. If it's going to break, it's probably going to be breaking pretty soon as the dollar becomes. As news gets out about whatever the dollar is going to position, the dollar is going to be taking today. But right now, I'm looking at dollar weakness today, and a lot of that has to do with the U.S. election. I noticed that Bitcoin took off yesterday around 5 o'clock. It made a nice little run to the upside.
My chagrin, I was waiting for it to go down a little bit more.
Yeah.
So I've missed my entry. We'll see if it pulls back again before the end of the year.
Oh, it's going to be pulling back, and then it's going to be going. I mean, I think it's going to start. I'd say right now, buy the pullbacks and sell the spikes.
Yeah, that's what I'm waiting for. I'm waiting for a good pullback, and then I'll jump back into it.
But as we go into more of a democratic society, and we get more into the spending and printing, you're going to be seeing a whole big change in the U.S. dollar and financial systems of the world.
Mm-hmm. Well, they have good predictions for it by the end of next year.
Yeah,
So
I would recommend that everybody start getting familiar with cryptocurrencies, because I think you're going to be seeing more and more of that. And we've been seeing it quite a bit, or even the last several years, as the international broker firms, rather than taking wire transfers, they've been preferring to have you transfer your money via Bitcoin into your accounts. And the big banks and institutions don't do things like that unless they see something coming.
yeah.
So we're going to be getting into new financial system as the cryptos and the blockchain starts becoming more and more of an everyday commonplace word. So it's here.
Yeah. Seems
whether we like it or not, whether we want to or not, it's going to be here, and we're going to have to either get used to it or be left behind.
Yeah. It kind of goes into the whole thought of like, there's a lot of economic as well as social discussion about like the Great Reset per se.
Yeah. Well, we are into a global society, and globally, the blockchain and transfer of money is going to be easier through that than it's going to be through trying to wire money, and just the time factor and everything else. And nations are adopting it.
Just like remember, like when they changed over, or maybe some of the people that are with us don't remember because they're younger than me. But when the whole like euros came about, and all the countries got together, and that was they were talking about it for a little bit, and then all of a sudden they did it. So
yeah, I was flying over to Europe during that time. That's when I started traveling international, and I can remember walking into the hotel to exchange some money for Italian lire.
Mm-hmm.
And I was so amazed that and it was like you give $1 would give you 2,000 lire. And I thought back then, I said, there was probably a time in history where that lire would actually buy something. Like 1 lire would buy a cup of coffee or a beer.
Right.
And now it was like, well, in order to buy a beer with the Italian lire, you need a 10,000 lire in order to buy a beer, or buy a cup of coffee. Mm-hmm. And I thought then that's how deflated or inflated that lira was to the international markets. Well, and then the euro came out, and everything was pretty much tied to the dollar. €1 was basically tied to $1. Right. And then it started fluctuating. And now you can even look and see what the euro is. If you look at the euro US, the €1, let's see, where is it here?
It's about midway.
Right now, the euro, where is it? What's the price of it? Let me find my chart here.
Yeah. Go down one more from the smiley face or whatever that is.
USD right here.
There.
So right now, I mean, before when they first started out, $1 or €1 was equal to $1. Well, now it's going to be €1 is going to be equal to $1.20. So basically, the dollar has lost 20%, 21% of its value from when it started. And it hasn't really gotten back to that 1-to-1 ratio for quite some time. If you look back over time, and so it's I've seen it's only going to get worse. I mean, I've seen it up to $1.50, around $1.50 something to €1. When the euro first came out, the euro was so weak back then. Is actually you $1, 1.75 would buy a euro. I saw it down that low, but now it's up to $1.20. It's hanging right around between $1.20 and $1.30 for a euro. And as we print more and more money, it's just going to get worse and worse and worse. And the quantitative easing of, and it's not just the U.S. that does it. The Japanese yen does it. The euro does it. The British pound does. I mean, it's all a matter of they all do it. But eventually, what's going to happen is we're going to get to a probably an internationally accepted currency that nations can trade and people of nations can trade for goods just through the blockchain and the cryptocurrencies. And that's what I see coming.
Yeah, I think you're right, Al. I think that's where it's going to be going.
And the market is now open. It's 9:33. We'll go for about another 30 minutes, and then we will be done for the day. Let's see how our, what was that? That was the New Zealand US we were looking at. Let's
Yeah.
get back on that. No, it's still hanging in there. See, if you ever been really angry, said, okay, I'm just taking right soon that breakout, you'd still be sitting here wondering what's going to happen with it. And I'd still be wondering what's happening with it.
Mm-hmm.
I don't see a trade here.
Yeah.
No, it's just ranging, not doing much of anything. I think it's because it's getting closer to the end of the year too. We're in the middle of December.
And you're going to see a lot. You're going to see a lot of that. You'll see a lot of that.
Doesn't mean you can't still grab your pips now and again, though.
Yeah. Well, you just try and grab those five or 10 pips if you can, and just
yeah.
Just for a moment, going back to that Euro US, my father lives out in this area by me that there's a lot of wealthier people out there, right? And they were taking on summer rentals because it's a beach community. They were taking the euro rather than the dollar. Mm-hmm. They had, because you had a lot of tourists would also come and spend some time, and yeah, rentals were the euro.
It doesn't surprise me. Yeah, especially if a lot of the people were international travelers, then they'll just let us keep it in their home country's currency.
Yeah.
And a lot of times too, they probably did. A lot of people probably took it via credit card, and that's the other thing too. Is you're going to start seeing where we're going to be more and more of a digital society, especially with the covert and everything, the pandemic, and people not touching things that other people are touching, and people are using credit cards with readers that you just hold on to your credit card or they scan it. You're also going to be seeing more of the using your phones for, you go to the grocery store and you use your Apple Pay or your PayPal to the reader, and you're going to see more and more of that where there's be less and less transfer of actual cash. We're already seeing, our kids are already, they do Venmo, and they go out with their friends to a restaurant, they split the bill, and rather than divvying up the cash on the table, they just go, let me just Venmo you your $5.22 that I owe you for the tip or whatever.
Yeah.
Yeah, right now New Zealand's starting to pull back, still inside the wedge, still not going anywhere. It may give a little bit of, it may bounce down here, may bounce, come back up. But right now there's no real clear direction to it. So we'll just stay out of that one.
Was it yesterday we were talking about looking for like wicks?
Yes, wiki pairs.
Right. This one's a little bit wicky. It's on that side.
Yeah, you were looking at something
15.
there, Eva. What did you find one that you started watching?
Actually, I found one that I'm using. I'm using the EuroCAD, and it's actually doing pretty good.
Oh, and that's with the that was with the variable.
Well, that's with variable. Yeah. So it's pretty wiki. Right now I'm in 4 trades with it.
Huh?
And it's just about ready to close out. It just has to like get another $1 or $2 in the positive, and it'll close down my bucket of 4 trades.
Right.
So you know what? That's not too bad, and it's pretty wiki. But I want to still look for some other ones. You know, and the good thing is, because it is just such an odd currency pair and the US isn't involved with it, it seems to be a little bit more easygoing, I guess is a good way to say it. You know, like there's not been any huge drawdown with it. I've got it set at 15 pip trade intervals for this one pair. So we'll see what it does. I'm on demo. So I can mess around a little bit before I go live with it. But so far it seems to be doing okay. So we'll see.
Yeah, I just couldn't recall what the conversation was.
Yeah, I
talked
still
about
have to go
wicks.
through for some more wiki pairs and see what I can find.
Yeah.
But I imagine they'll change too as time goes. Like EuroCAD is wiki now, and maybe in a month's time it won't be so much. So it's good to keep kind of looking through to see what's out there. You know.
Have you noticed? I know it was only yesterday that you picked it, but did was there anything where like with the pound CAD?
I won't do the pound. I refuse to touch the pound anymore. That's just me. I just don't. It moves too sporadically. It's like I don't know, a toddler that's going on 24 hours without sleep, and it's always like that.
We'll change that. We'll change that.
I'm not going anywhere near the pound.
We'll change that.
But it is, like I was saying, every time you just breathe the word Brexit, it doesn't even have to be any major kind of news. It just says, oh, he might talk about Brexit on the news tonight. That's it. The pound goes out of control. So I'm not going anywhere near it for a while until it calms down. But doesn't mean that I may not in future, but just right now, until they settle this thing, I don't want to go near it.
Yeah.
It's not been one of my friends.
Well, right now, the New Zealand US dollar is still inside the wedge. It had a nice little drop here in the last few minutes. That's all it's doing right now. All it's doing is retesting the undershoot area. As you see where it broke out of this 5-minute green zone, went up, came back down. Now it's retesting it. This could be a possible entry to go long, but it's still it's as it's seen, it's getting the wedge is getting smaller, so your range of profitability from one extreme to the other is still getting smaller. So even if you were to take this trade right now, even though the strong pullback here, if you took it back up to the top of the wedge, you could maybe get 8 pips if it does that, and you'll also be risking 4 pips. So do you really want to do that type of a trade, knowing that you still have to get your spread out of it, and you still have to just right now you just sort of wait and see if it comes down, bounces all the way down in here. You then you have a little bit better possibility. But even if you get all the way down to the bottom, to the top. Now you're looking at 12 pips. So you could get your 5 pips if it comes all the way down, if this zone down here would hold, this overshoot zone. But now I don't want to see it come down into here, have this wedge hold, this trend line hold. If I do, after take a long, I want to put my stop down on the other side of this area. Now this is the overnight lows right here. So if it breaks, right now it's still ranging inside the overnight high and the overnight low. And so that's this is why sometimes you just try to figure out, is there enough room? Is it a major break? Is it just another? I mean, we did have this low, and they have this higher low down here at the bottom of a nice little move down. So it's a good chance it is going to consolidate and then break to the upside, because it has a lot more room to the upside after this big move from the last couple of days. But here's where the origin of the move was, all the way down here. It came up, pulled back, came up, and now we're looking to see if it's going to retest this. So right now it's right in the middle. You don't know if it's going to break to the upside or if it's going to break to the downside. Either way, it's probably going to give a real strong move in one direction, get everybody sucked in to the downside, and then come back up, or it's going to get everybody move to the upside real strong, get everybody sucked in, take their stops, and move it to the downside. So you're better off in just kind of staying away from this area. Wait for it to get down here, or wait for it to get back up to the retest area, and then that way you're at the extreme of both ends. And you can see where those extremes are. From the extreme of, when you look at the RSIs, you see all the RSIs are right down here below this 11 and 25 area. Both of them, the 8 and the 3, come over here. You can see they're both above, which means this is the extreme. So right now, the overall move of this thing from October, from the 9th, which is last Wednesday, till yesterday, the total move of this thing was basically, from a higher time frame sense, was actually, I mean, you're looking at 109 pips. Well, we need to see it come back at least 50 pips and see of a bounce off of major point, and then see it. But you're really better off to just wait till it gets up here, or wait until it gets down here, and then try and find it. You even see, like, we had an alert down here last week. We had a wedge alert. Well, this was a break to the upside. And you can see the price action on this. You have a nice move down. It pulled back up, came back down. This D couldn't break the B, broke to the top of the wedge, came up, retested the wedge, and then it just kept on going until it got up to the blue 15. And so that's why when you're in these areas right here, you're better off and just look for a pair that's already at those extremes. So, and especially when they move 100 pips, you're going to see some sort of a pullback. Any other questions?
What time are we on till today, Al?
We'll probably we'll go for another 15 minutes. We'll see if there's another alert. If there's no alert at another minute or two, we may just wrap this thing up earlier, since there's no questions and there's really nothing much to be trading here right now. Okay, so we're getting into the doldrums of we're getting near a lot of your institutions they're not taking big positions. They're just coasting right now till the end of the year. And in January, you'll start seeing a little bit more activity. Right now, a lot of people just kind of stop trading after the December 15th. A lot of people just stop taking trades and they go on to doing other things. They close out their books. They take the time to do other things.
I don't know, Christine, did you just say something? I can barely hear you.
No, it was my phone. Siri was talking to me. I never talk to her, but sometimes she talks to me.
Oh, okay. Actually, Leslie said kind of a slow day on the charts, but still an informative session.
Well, good. Thank you, Leslie. We always appreciate your participation and your coming in to join us in the mornings. So we do appreciate that. And we just hope that every day you can come out with another little tidbit of information that helps your trading. We cover a lot of different topics here. Sometimes we show a lot of different ways of looking at the same thing. Just trying to show different ways of drawing the same picture and having your eyes get tuned to seeing different patterns. The more you learn, the more you learn the technical trading and the price action and the patterns that these charts produce, the more successful you're going to be with your not only your mental game but also with your technical game.
And I think we can all learn a lot from different traders. I mean, we all trade differently. We all
Yes.
look at things differently. So, I don't know.
That is for sure.
I find this sessions invaluable. But
go this higher time frame and you can just see where you can see this is one reason why I like the 15-minute zones. This is a 15-minute blue zone. You come over here, I don't know if you can see one over here or not. It probably won't show up with the if I come over here, maybe it will. Here's a 15-minute zone right here. You can see right here. Here's where 15-minute zone to 15-minute zone. There's the blue, here's the blue. Here's the overshoot. Here's the overshoot. And you can see where it bases in between the red and the blue. So this would be areas I'd be looking at, maybe taking it, but there we go on a 30-minute chart. So just noting these different areas. These are like 60 pips away, I think. 190 pips away. This is on the New Zealand. Yeah, this is 190 pips.
Just to be clear, these are fib lines we're looking at.
Yeah, these are fib lines. These are fib lines generated by the tool that we have, this FPRP tool that we use. We use that. We use this RCS tool. But these are all significant areas, and that's why I say. That's why when I draw these and I see where the 15-minute lines are, I usually make special note of that. And you can see even like between here and here, if we draw the 15-minute red zone. And here's a 15-minute green. These are the midway pullbacks. These are the middle thirds. And you can see if you can just eyeball this, you can see these things came right down in the middle between here and here. Well, you have a 5-minute zones, or there's 3 5-minute zones right in between here. And you can see this is going to come right down in the middle of that middle 5-minute period. This is not just this chart. This happens over and over again on several charts. But you find out where it bounced, what kind of. So if it bounced from this green, and we said oftentimes we say it goes from blue to blue or green to green. Well, here's a 5-minute. Look at here. So here's 5-minute green, with the in between, came right down to this, and this one came right to the line. Look where this one's coming into, where it's basing. So that's why this is kind of a significant area where we don't know whether it's going to break to the downside or break the upside. For me, I'm going to stay out of it till it makes more of a concrete decision. But look at all these candles right here in the middle. If you draw a box in that middle area, you can see there was a lot of. This is like the magnet area. This is a magnet where it's been significant. Where if you take this all the way over here, see where it came up here, came in here, broke out, came back in, broke out, came back in, broke out, came back in, broke down, came back in. You can see where everything is like a magnet. It keeps on bringing. Once the price leaves it, it seems to want to come right back into it. That's why I'm more inclined to think this thing's going to break to the downside more so than the upside. because it already just came up from the high. Here's a 50-minute blue. It came all the way up from up here. So it's good to always know where you are in the curve to decide which way you're going to be going with this thing. And on that note, I think we're going to, unless there's any other questions, I think we're going to wrap it up. We don't have any new alerts. And so we are going to call it a day. Thanks for showing up. We'll be here again 8 o'clock tomorrow morning.
Have a wonderful day, everybody.
Have a good day.
Keep green.